Today we will talk about XRP and tokenized deposits again, which will also include ties into XLM and into SHX. And that is because of how the projects are so interconnected and how Stellar and Ripple's consensus protocols are unique and designed for large-scale institutional adoption. Here is an opinion of where we are at in terms of tokenization and tokenized bank deposits.
So tokenization is the digital representation of claims, together with incorporating the rules and logic that governs the transfers. Now, that could happen on a DLT platform, or it could be something a little bit more centralized. I think that depends on the application. And of course, the big use case is to ensure the contingent performance of actions. So, when you have various economic arrangements, there are occasions where you want to trigger certain actions on specific conditions. So a very classical example is payment versus delivery. So you're selling me a security and I will pay you. In order that we don't have principal risk, it would be great if my payment goes through if and only if you actually transferred the asset. And we know from the Hashtag case of what can go wrong when that doesn't happen. So this is a very classical, in fact, canonical use of tokenization.
And how exactly does all of that tie into XLM and XRP in particular? Well, especially with XLM, the Stellar Consensus Protocol has advanced to a point where it can pretty much meet all of the requirements that he was just explaining on its own without any third-party integration. If you combine that with the IBM Hyperledger platform, that connects into not only SHX and XRP, and even back into Velo as well, which has its own involvement in CBDCs. It connects it to things like R3 Corda and XDC, HBAR, Casper, Quant, Algo, all of the ISO 222 quote-unquote compliant coins and tokens. And today it's important to talk about XRP with central banks, derivatives, deposits, and CBDCs, because I also have a hypothesis that tokenized deposits might not be only an introduction to warm people up to CBDCs, but it could almost effectively replace that and or add on to that kind of a product. Tokenized deposits are a store of value for making payments within network. And that's really all it is. It is a digital representation of deposits within a bank that can be programmed with smart contract integration in order to do certain things in certain ways at certain times. And it would enable the instant transfer of value in between institutions connected into the same network, which would probably look like transfers between different bank branches at this point. Now we will talk about how Ripple is positioned to take control of this, particularly in the US and in the UK, especially after they announced that they are working on a stablecoin. Here is more about tokenized bank deposits and Ripple in particular. I will come back to Citibank here in a minute, but tokenized liabilities or deposits are a development in financial tech, enabling traditional bank obligations such as deposits to be converted and managed on chain as digital tokens, promising greater transparency and efficiency in transactions. And that has to do with the regulated liability network, which is a collaboration between the Federal Reserve Bank of New York and the BIS, and how that ties into SHX too. Here is what I was talking about with the involvement of Citibank, who was talking about two digital assets solutions targeting institutions. One was a pilot for tokenized deposits. And here is the article from September 2023. And it's interesting because the smart contracts that they talked about were piloted in collaboration with, which has ties into XLM and IBM in the old TradeLens platform that seems to have been possibly replaced with the We.Trade platform. It is also calling out JPM and JPM coin, which is trying to do a comparable thing, but with all of the ties back into JPM that XRP, XLM, SHX, and IBM have, it wouldn't surprise me that it looks pretty comparable to what we are talking about here directly in terms of XRP's involvement. Now, Ripple has been concentrating on partnering with and acquiring companies who concentrate on institutional custody. And why do you think that would be? Well, you need to be able to provide custodial services for these kinds of platforms that will be connected into institutional value. And one of those is Decode, which is fully integrated into BBVA. And it is explaining CBDCs, stablecoins, and real world assets. But it is talking about real world assets like stocks, bonds, commodities, real estate, and other financial instruments. Here it is talking about the principles of stablecoins, which in one way a tokenized deposit would look and act a lot like a stablecoin would. And is this tokenized deposit concentration of Ripple and XRP connected into its recent announcement about a stablecoin on the XRPL. Here is more on the regulated liability network, which is trying to bridge the public and private. It aims to create a network where public and private financial institutions can interact more seamlessly. And it was all about tokenized regulated liabilities, which are replacements for conventional deposit holdings. And tokenized regulated liabilities sounds like a combination of everything that Ripple is concentrating on. They have multiple applications out there where they are tokenizing real world assets of all types. They are partnering with and acquiring companies concentrating on custody, and they are also working with the New York Fed and tokenizing bank deposits. A significant advantage of the RLN is that it is built to operate within the current legal and regulatory frameworks, which means it does not require new laws or regulations to be created for it to actually work, which is my whole argument that tokenized deposits could either be the introduction into the adoption of CBDCs and blockchain infrastructure, or it could effectively replace having to push CBDCs so hard when it is politically unpopular. And here we get back to JPM. On April 12th, 2024, Kyriba announced that it had integrated Onyx with its cloud treasury application. Specifically, its clients with JPM can manage their JPM coin accounts to send 24/7 cross-border payments to other branches. And here is the actual article, and here is the Kiriba site, which has all kinds of financial technology applications. Now, why do I tend to connect things like SHX and VLO into XLM and XRP? Well, it not only has to do with IBM on the infrastructure side, but it has to do with PayPal and the PayPal mafia, because the extremely successful individuals who created PayPal and revolutionized payments got involved with Ripple and then Stellar, Stronghold, and Velo. And it is pretty clear that they are all working together in some way, shape, or form, because yes, they are working on things that do overlap with each other's concentrations at times. But in my opinion, that is because in the real world, we don't have any kinds of products out there that 100% control everything in its application and its concentration. We have options, and all of those options tend to mature over time and evolve to interact with more and more things and not just try to outright replace everything. And if you look at who is tied into the PayPal mafia, you've got Jed McCaleb, Chris Larson, David Mazieres, who created the Stellar Consensus Protocol, Mike Kennedy, who was the interim CEO of Velo for a while, and Sean, who is the CTO at Stronghold. But you also have Tammy Camp, who is the CEO at Stronghold and was heavily involved in the successful rollout of Stellar. And of course, it's hard to not call out the involvement of old Elon. But it is interesting because the more and more that you learn about SHX, the more and more that it looks as if it could be very well positioned to be a common bridge currency that can interconnect things that use XLM and XRP and all of the applications and the institutions that each of those connect into. Another example is that Stronghold put out a video where they talk about connecting it all and puts a coin with the Ripple logo into a piggy bank.
We make sure to connect it all. When we talk about building bridges, one example would be a merchant with an ACH transaction volume that earns digital currency so they can apply it to offset transaction fees. We integrate the old with the new, and it's all modernized together.
And what did he say in there? He said that it is a bridge. But there is one more thing that I want to touch on because it's also an idea that I am working on. But Ripple is partnered up with the ISDA, which is the International Swaps and Derivatives Association, which happened in August of 2023. And the derivatives market is about 1.2 quadrillion annually, which is 1,200 trillion. So it's hard to find anything on this out there, but I'm beginning to try to piece together some ideas of how tokenized deposits could be used in a way that could be comparable to derivatives for the use of financial institutions, because institutions don't really make anything off of what we put in. They are able to loan out the vast majority of everything that you and I actually have in our account in a bank. And that is how they earn, because they loan it out and they earn interest off of that. Well, if they are tokenizing deposits, which are effectively cash, and that is inherently a one-to-one backed asset in a country's currency, why couldn't they actually use the tokenized deposits and the contracts available with that to spin those off into derivatives of all different kinds? And I was inquiring with AI on that, and of course it won't actually come out and provide any responses that would hypothesize on that, but it did compare some interesting things. So tokenized deposits adhere to fractional reserve requirements, which maintain leverage in the banking system, which is interesting because that sounds like how the entire banking system right now actually works. And derivatives are not the exact same thing. And here it even says that they are not directly linked to traditional deposits, which is true at this point in time because derivatives are contract based and often include options and futures. But the key thing in there is the involvement of contracts. And if tokenized deposits can be a part of a smart contract, why couldn't they use tokenized deposits to take derivatives to an entirely new height and very likely, unfortunately, an entirely new height of manipulation in our monetary infrastructure?